This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global commodity traders Gunvor and Trafigura anticipate oil prices may range between $60 and $70 per barrel due to sluggish demand from China and persistent global oversupply, executives told a conference on Monday. Oil prices have been under pressure due to concerns about waning demand in key economies China and the US despite earlier expectations of summer demand being supportive, dipping after touching over $90 a barrel earlier this year. Market relief came after the Organization of the Petroleum Exporting Countries and its allies, the group known as OPEC+, agreed last week to delay a planned oil output increase for October and November. However, commodity traders warn this relief may be short-lived.
Oil futures jumped in Asian trading on Monday as a potential hurricane system approached the U.S. Gulf Coast, and as markets recovered from a sell-off following weaker-than-expected U.S. jobs data on Friday. West Texas Intermediate crude futures rose 72 cents, or 1.06%, to $68.39 a barrel by 0635 GMT. Brent crude futures were up 71 cents, or 1%, at $71.77 a barrel. Prices had gained as much as $1 during early Asian trading before pulling back. Analysts said the bounce was in part a reaction to a potential hurricane in the U.S. Gulf Coast.
Moving on to the top news in the energy sector.
Indonesia is still waiting for cheaper financing to hasten early retirement of coal-fired power plants under a pact with the rich nations of the G7 grouping, senior government officials said on Monday, in the transition to cleaner electricity. The Southeast Asian nation of more than 275 million had been promised $20 billion in funds as part of the G7's Just Energy Transition Partnership, unveiled in 2022, but very little money has been disbursed. Luhut Panjaitan, a senior minister overseeing mining, said the current financing mechanism did not include any grants, and did not fix existing issues such as high costs of retirement.
U.S. energy firms this week cut the number of oil and natural gas rigs operating for a fourth week in a row for the first time since late June, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, fell by 1 to 582 in the week to September 6, the lowest since June. Baker Hughes said oil rigs held at 483 this week, while gas rigs fell by 1 to 94. Their lowest since April 2021. In the Denver-Julesburg, DJ, Niobrara Basin in Colorado, Wyoming, Nebraska and Kansas, drillers cut one rig, bringing the total down to 8, the lowest since June 2021. Next, we have the top news in metal markets. Iron ore futures prices rose on Monday after 6 days of losses, as hopes of fresh stimulus from top consumer China following a batch of tepid economic data lifted market sentiment. The most traded January iron ore contract on China's Dalian Commodity Exchange ended daytime trade 0.44% higher at 685 yuan, $96.35, a metric ton. Earlier in the session, the contract had fallen as low as 662 yuan, its weakest since August 21, 2023. The benchmark October iron ore on the Singapore Exchange was down 0.22% at $91.50 a ton, as of 07:05 GMT.
Copper prices fell on Monday after weaker-than-expected U.S. jobs data fanned more worries over the health of the world's largest economy. 3-month copper on the London Metal Exchange shed 0.5% to $8,951 per metric ton by 0144 GMT. Having lost 2.6% last week, the biggest weekly fall since July. The most traded October copper contract on the Shanghai Futures Exchange declined 1.2% to 71,720 yuan, $10,091.89, a ton.
We will now look at the top news in the agricultural sector.
Chicago corn and soybeans lost more ground on Monday, with market participants taking positions ahead of U.S. supply-demand reports due later this week amid expectations of near-record U.S. output. Wheat dropped to a one-week low on pressure from ample Black Sea supplies, although lower output in Europe curbed losses. Buyers in the physical market in Asia are just covering spot demand, said one trader in Singapore. There is not much upside for prices from the current level, given the outlook for U.S. output and overall supplies.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.